Hi, welcome to the Market Alert for Monday, 11th of November 2019. So, over the weekend, Bitcoin prices surge close to 4% in under 10 minutes. However, there's another side to the story, so let's have a look at this. So, let's start off with the daily charts. You can see on Friday the market took out the 200 bar moving average. Saturday prices found support, rallied on Sunday, and then are down on the overnight for Monday there. So the detail, look at the 4 hour, you can see that we broke out of the sideways range that we've been in. We've gone into a bit of another sideways range there, but then the spike back out yesterday and then back in overnight. So on Friday, the market actually kicked into life. As I said, it will do it when you're not looking or least expect it. And prices moved down sharply there. You can see a really good move to the downside there from the high down to the low was $529, $530 range there. So prices moving lower, and then on Saturday they just found support. You can see there, and then on Sunday the market shot up back to where we were with a 4% rise. And this one bar alone, again, if we just have a look from the low to the high, just to get a ballpark figure there, $400 back up to and through the 200 bar moving average there. But overnight prices giving up these gains. You can see prices rounding over and currently have broken the 200 MA there, along with the DP level. So at the moment, the market looking a bit weakish, needs to get back above the 200 bar moving average, but we have got some volatility. So let's see if this continues through today, so we can get back into this market and trading it. Meanwhile, in the stock market, gold suffers worst week in 3 years. That's because it's manipulated. The gold market is incredibly buoyant at the moment, making new highs in 73 different currencies. So the last thing the Fed needs is the gold price to be the main headline. So the price has been slammed by using the paper money, the futures market. Very easy to sell a few billion ounces into the futures market and send the market to the downside. And that's precisely what they've done, because underneath there is a serious problem, as I've said before, that and as it says here, that the balance sheet explodes. Repos, QE, they're not calling it QE, they daren't call it QE. And then this is the reason. You look here, you've got global debt tops 188 trillion. Officially the biggest debt bubble the world has ever seen. I've been talking about this since 2011, and I will continue to talk about it, and one day it's going to end badly. When it ends, who knows? But as it says here, the global elite do not want humanity to be free. They want us to be in as much debt as possible so we can make them richer, and that is exactly what has happened since 2008. 1% has got richer and richer and richer, whilst everybody else can barely stand still and pay the debts. It's I don't want to get political about it, but this debt situation, because they wouldn't let the banks go bust, and they've printed money for the taxpayer to pick up the tab to keep the elite in the lifestyle they're accustomed to, whether it's Europe, whether it's the UK, whether it's in the US, but globally there is a serious debt problem, and it's now coming home to roost. And we can see this by looking at the 2-year, 10-year as well, how this has switched from being inverted only a couple of months ago to now. So you can see rates there making new highs, and we had one on Friday, 0.39, as we head back up. On the interest rate side of things, there is a problem, Houston. We have a problem. And as I said on Friday, the Dow is due for a correction. The implied volatility is in the lows. We see the market being kept on the highs during Friday. This little bar here, I couldn't load the charts this morning, and what's happened is that ETX has changed the time inside of their platform. I had to move the times on all of the charts last week to 3 hours in the settings over here, and now switched it back to 2. It works So I think it's something to do with the US switching their clocks. But again, who knows, because this is the data comes from Europe, not from the US, but hey ho. Anyway, so I don't know why this little one's turned up. They've obviously done something, which is the start of the overnight session, is what it is. IG Index have this in all of their daily charts, and I don't like it. I don't want it, and I prefer it that the overnight is combined into the one bar. Anyway, minor detail, but yeah, Friday you can see the market did everything it could within its power to stay above the 200 MA for a while, and then it worked its way back, and then we just moved to the downside, sold off. We double bottomed, very high volume down here, stopping volume. Market retests this low, we get less volume, and then it's just over to the plunge protection team to bring the market back, which is exactly what they did. As we came back through the psychological level of 27,600, you can see the market sitting on it again here, comes back here and trades here. So it springs through, comes back, has another test, comes back, and now holds. But overnight, the market through the DP level and the 200 bar moving average there. Beautiful overnight trade to the downside there, and the market just sailing to the downside at the moment, as you can see in the daily chart. So what are we down at the moment? Let's have a look here. Down 129 points according to the top here, but I'm just going to double check that, because with that little bit of I just grabbed that there, get an idea. Yeah, 143 points down. So yeah, the Dow moving lower. Now the implied volatility is was down on Friday, but this is going to kick up. I'll be able to test whether it's right or not. I've not heard back from iVolatility at the moment, so I'm assuming that because it is being updated, it is correct, but we'll find out soon enough tomorrow if we have a big sell-off today. And there you can see we're still green at the moment, and we're above the 20 bar moving average with prices. But as I said last week, this has got to change. We have a lot more frequent corrections, and with what we've just seen in the background here with the debt and the Fed ripping the balance sheet higher, then we can expect more of this. Meanwhile, news-wise, the only one you want to look out for this week is Chair Powell. He's testifying. He's before the House Budget Committee in Washington talking about the economy. That'll be an interesting one. Is he lying? Well, if his lips are moving, then sure enough he will be. Simple as that. So yeah, that's the only really big news this week. There's nothing tomorrow. Prelim GDP today for the UK. This is forecast as lower, so that'll be blamed on Brexit, even though there's a global slowdown, which is never reported in the news. And you're certainly not going to see this making the BBC news tonight. That's for sure. That's not going to put in any appearance anytime soon. For the obvious reasons, because there is no doubt if you start talking about recession, people tighten the belts, and then it turns up a lot faster than it would anyway. So that's probably why it's banned from all news at the moment. The fact that Italy's in recession, Germany about to head into recession, doesn't matter, as far as Brexit and everything else is concerned. So yeah, it looks like it's going to be lively, to say the least. Actually, he's testifying over 2 days. He's Wednesday and Thursday. This is the Joint Economic Committee on Wednesday, and that's at 4 p.m. It's a bit like the Humphrey Hawking testimony, which is a 2-day event as well. So Powell's out for 2 days, 4 p.m. and 3 p.m. on Thursday. Okay, that will do it for this one. Let's see what the Dow does in the pre-market session. It may be a case that it gets sent to the downside and then is brought back. We've got a bit of stopping volume here at the moment, with prices finding a bit of support there. A lot of volume for this time of the morning on the overnight markets. So we'll see. Okay, thanks for watching. See you in the next one.